Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. I wanted to do a series of videos working out what it would take for Tesla to achieve the $10,000 stock price target that so many investors look to. Well, as stock prices are an arbitrary measure of a company's value, as there could always be a split, let's change the question to what will it take for Tesla to reach a market cap of $10 trillion. Now, a lot of people think $10 trillion is simply an absurd number, making it about 5 times the current valuation of Apple, the largest company in the world, and actually the largest company in history compared to the Dutch East India Company, with a market valuation of around $8 trillion in today's money. Talking of today's money, let's run the scenario without any inflation involved, implying Tesla stock will reach $10 trillion in today's money, and all of their car sale prices will not have increased in value either. With the governments printing so much money these days, Tesla could even be worth $100 trillion at this rate, or perhaps 5 million Bitcoin. Either way, totally arbitrary measurements. The 10 trillion valuation is often thrown around with a 10-year target attached, although that now equates to more like 2030 now. So what will it take for Tesla to reach a 10 trillion valuation by 2030? What level will they need to have reached? Well, I think we can actually find out with some quite easy math, and we can just see how close they get. So we have an endgame of $10 trillion. So how much income does Tesla need to ascertain to justify such a high price? I feel like a PE ratio of 20 should be fair, in fact conservative. I actually think a company at this valuation would have such a large moat, for lack of a better word, as I know Elon hates moats, and has shown so much growth and innovation and no reason for it to stop, that it should actually have a PE ratio of probably closer to 30. Anyway, with a PE ratio of 20, Tesla will need to achieve a net profit of $500 billion a year. So let's work out how they can achieve that. There's a lot to go through, so I wanted to break it up into several parts. The first part in this video, we will establish how much gross profit Tesla can make in their vehicle sales. Rather than try and work out how many cars Tesla will manufacture, and how many of each model, and how many new models of each vehicle type will be launched from which factory, and how many factories they will have on each continent, there's a much simpler method. We can just calculate how much profit on average Tesla can make per kilowatt hour of battery they sell. Simple. Now, remember, this is not with today's technology and today's battery prices. This is what Tesla have achieved by 2030, implying that Tesla could have got their battery costs down to as low as perhaps $20 to $30 per kilowatt hour. I expect most likely much cheaper with what Tesla must have achieved by this stage, with $20 or so billion invested in Tesla R&D. I say Tesla R&D as $1 in Tesla R&D goes exponentially further than $1 in R&D somewhere else. Again, remember, Tesla have all the best engineers, and the only place that may have better engineers is SpaceX, whom of which they are likely to consult with from time to time. Just off the top of my head, I can't think of any other automotive companies that are able to pull resources from a rocket company. So I think it might be possible that Tesla could create a battery using a higher silicon content in their anode, which would vastly improve density, as silicon can store a lot more lithium ions than graphite. The problem they have is that it expands too much and cracks the structure. Anyway, we don't have time to get into too much details about anodes right now, but essentially there's a good chance Tesla have made some drastic battery improvements by 2030. Of course, Tesla wouldn't just be working on getting the cost of their batteries down, but they'd also want to make sure every kilowatt hour of battery is used to its fullest potential, improving the motor, drivetrain, software, in-car electronics, like moving from 12 volt to 48 volt to power most of the car functions. So much would have been done to make this car get more range and performance from every kilowatt hour, implying that the cars simply will require less batteries. And then you hit a virtuous circle that because the car uses less batteries, then it becomes lighter, which in turn means less batteries are required, which again makes every kilowatt hour that much more valuable. And despite all these efforts to drastically improve efficiencies over the years, Elon has said the biggest focus is in manufacturing. This is where the real savings are, not just in money, but in weight. Currently, the die-cast gigapress machines are able to save over 70 parts. This is only the start. Obviously, that's an outstanding achievement. But what about in the future? What if the entire shell of the car can be in one piece? Do you have any idea how cheap that would make the car to build? How structurally sound it would become for safety? How perfectly built for aesthetics and quality? And how much lighter for performance? This is the goal, and likely to be achieved by then. So if the rest of the car costs less to build, then that would mean there is more profit per car, implying there is more profit per kilowatt hour of battery. In 2020, Tesla produced 500,000 cars with a gross profit of $7 billion for autos, but $1.58 billion of that was for regulatory credits. If we remove that, then it comes to $5.4 billion. That comes to a gross profit per car of around $11,000. The vast majority of these sales were Model 3, so I would like to guess that these cars sold with an average battery size of 60 kilowatt hours, which comes to around $183 gross profit per kilowatt hour. So if battery costs have come down significantly by 2030, along with manufacturing costs, and okay, sure, perhaps the prices of the cars have dropped somewhat, and it's likely that Tesla's compact $25,000 models would account for almost 50% of all sales, but I think it would still be possible for profits to double to $360 per kilowatt hour of battery for vehicles. We're talking in 9 years' time as well, so as you think Tesla's FSD is great now, with the data they've collected with just over 1 million cars on the road, then imagine what it would be like in 9 years' time with 100 million Teslas on the road and 3 or 4 more generations of chips, their Dojo AI expanded by several more orders of magnitude, higher quality cameras for vision, etc, etc, etc. Bottom line, I don't think any of us can argue that by this stage, FSD will be truly amazing, and very few people want to drive without it, implying everyone will be ordering FSD, and the price of FSD will not be $10,000 anymore. It will be significantly higher, as it offers that much more value. It could be as much as $30,000. But then it looks like the subscription model will only be about $200 a month, which sounds like much better value. But that's a subscription model for the current FSD. It's highly possible this price will also increase when level 5 autonomy is achieved. But think about how good a value that is. Most people on their way back and forth to work must spend at least 1 hour a day driving. Some people much more. But let's take 1 hour as the benchmark. Of course, they likely go out in the weekends too, in the evenings after work, and probably in the day during work. So let's say an average person might drive 10 hours a week. An American makes an average of just over $30,000 a year, and works 35 hours a week, or 1,800 hours a year, equating to an average of $16 an hour. Americans have a net average of 24% tax, meaning the average American makes $12 an hour after tax. So if we multiply $12 an hour by 10 hours a week, that would be the equivalent of $120 a week, or $500 a month. Of course, there are plenty of people who make $100,000 a year and spend 20 hours a week in traffic, although they might work closer to 45 hours a week, which would be the equivalent of earning $42 an hour, which is perhaps about $30 an hour after paying a slightly higher tax rate, which would equate to about $2,500 of time spent in traffic each month. In other words, FSD is a lot more valuable to some people than others. Of course, just because the car is driving itself, it doesn't mean that you can earn money, but it's a number of what people value their time. And sure, you are stuck in a car still, but you could sleep, watch Netflix, work on your laptop. But yeah, an hour in a car is not as valuable as an hour of free time. However, when you arrive at work, after spending an hour or so of time in soul-crushing traffic, you're already more stressed and tired. So it actually will impact your work. Either way, I think about $200 a month probably is about the right price point for FSD. Now, this is still a noticeable amount to have to pay for most people, although bear in mind it's still significantly cheaper than having a full-time chauffeur. Although in China, more people do have chauffeurs, which is why car companies make customized Chinese models. For example, the BMW 5 Series has a long wheelbase option for China, as so many more Chinese have chauffeurs. Why? Because labour is simply that much cheaper. In fact, Tesla weren't able to get away with their Model S in China. They had to make some alterations to make the rear more luxurious for their passengers, for this reason. The Chinese luxury car market consumers spend more time in the rear seats due to having a chauffeur. My point here is that Tesla does have competition with FSD, being an actual chauffeur. This is probably partly why Tesla's FSD sales are so low in China, around 1 or 2% of orders, compared to the rest of the world. So this would mean that Tesla's monthly pricing model would have to compete with this alternative. But would that mean they have different pricing models in different countries, where labour costs less? Or they simply have similar prices internationally? I guess we'll have to wait and see. As for less developed nations, where citizens would struggle to afford $200 a month on FSD, as that might be their entire month's income, then it's obviously not an option for them. But of course, neither would have been purchasing a Tesla in the first place. Not everyone can afford to buy their own Tesla. In these nations, they'll be using robotaxis, which should cost less than any other form of transport available, aside from perhaps a bicycle. Not only will this be cheaper, it'll be safer, more luxurious, convenient, and faster. Even though the subscription model is ongoing and not a one-off expense, and I think quite possibly a more popular payment method for most consumers, we will still need to assign a one-off capital expense to it in order to establish our total profit per kilowatt hour. Let's say every order of FSD is worth $20,000, whether subscription or one-off. And although not everyone will purchase it for whatever reason, a lot of people certainly will. Elon says no one will be driving themselves, but despite that, for our numbers, I'm going to put in 50% of consumers ordering FSD, equating to an extra average $10,000 pure profit per car sold. Given the extra efficiencies in battery technology and half the sales coming from the cheaper models, I would assume we could be at an average of 50 kilowatt hours per car for the battery, but quite possibly a lot less. But again, let's err on the side of being conservative. That gives us an extra $200 per kilowatt hour, taking our total gross profit per kilowatt hour for vehicles sold to $560. Also, I have a feeling that Tesla might possibly require consumers to pay more than the FSD cost to be allowed to enter into the robotaxi network. Possibly, but maybe not. It just depends on how they want the business model. If they charged a higher one-off fee, then it would mean Tesla take a lower commission from the robotaxi. Shareholders like ongoing income more than one-off payments, so I think it most likely there may not be an extra cost to enter the robotaxi network, and they wouldn't want to deter Tesla owners from joining, as they want as many cars in the fleet as possible. Also, it might not reflect well on the brand if they suddenly ask consumers to pay an extra $50,000 to join robotaxis, when they probably inferred the $10,000 they paid back in 2021 included robotaxi inclusion. Tesla's most valuable asset is their brand. Okay, so we've calculated the cost per kilowatt hour per battery for vehicles sold. In the next video, we will look at the gross profit Tesla can achieve per kilowatt hour with energy storage. Thanks for listening, please hit the thumbs up and don't forget to subscribe.